Since the outbreak of the US-Iran war, oil has gone from $57 a barrel to $113 in under 14 weeks. Since then, the Indian rupee has depreciated 7% and our GDP forecast has been cut by 110 basis points. I'm Neha Mahendra and welcome to PropSutra with Balaji Rao. Balaji Rao is an industry veteran with over 35 years of work experience across real estate, hospitality, and financial services. He's currently a senior advisor with Tishman Spires India and a mentor with Prop News Time. In today's episode, we're discussing the Iran-US war and its economic consequences. The question is simple. What does the war in West Asia mean for real estate in India? Let's find out. Welcome to the show.
Thank you.
So my first question is, how far-reaching has the impact of the current war been on global economies?
Actually, if you think about it, it has three types of fallout in any war. We are not looking at the affected areas, that is the war zone. We are looking at the global economy and outside the war zone. The affected areas will naturally be severely impacted. So the first impact will always be on supply chain, whether it's oil in this case or any other material which is using that sea lane, they'll all be impacted. So the supply chain which is there in the global trade, that gets severely affected by any sort of a war-like situation. And larger the war, the larger the theater of war, then naturally more the bottlenecks and more disruptions in the supply chain of all materials. So that's the first impact which happens. The second impact which happens is the capital flows tend to go a bit haywire because there's a flight of capital during any war in the global economy back to safe havens.
Right.
You understand? Whether they go back to fixed instruments or cash or gold, because there's a flight to safety. So people pull out, especially from emerging markets, money and take it into the developed countries.
Right.
So liquidity crisis starts emerging. And the third is naturally the sentiment, the behavioral aspect.
Right.
So whether it's the stock market, commodities market, real estate market, all get impacted because the sentiment of the investor is actually affected by the war.
Right.
So when he takes into account all the aspects of the war, he naturally wants to hide for some time. He's what we call on a risk-off mode.
Right.
He doesn't take risk. So that actually impacts the investment cycle. So these are the three dimensions on which any war of any scale will impact the global economy.
Right. So then I'd like to start with first talking about global oil prices, how it's been hit, and subsequently construction costs that have gone up as a result of it.
If you look at oil first in isolation, it has got hit because 20% of the oil flows through the Straits of Hormuz.
Right.
So it's not that the oil fields first got impacted. The closure of the straits impacted the supply of oil, especially to South and East Asia and other places. And this cannot be easily, patched up by some other alternative lines. And even if you do, it will be expensive.
Right.
Okay. So oil naturally spun out of control, almost doubled itself. It's come back, but it's still higher than pre-war situation. But along with the oil, every other tanker, every other container having all sorts of supplies also get impacted.
Right.
Whether they're going east to west or west to east. So when it comes to construction materials, we import a lot of aluminium scrap. We import a lot of aluminium for our facades. We do a lot of facade imports. We do a lot of copper imports for MEP.
Right.
So all these have got impacted and the prices have risen.
Yeah.
So we generally are assuming the price rise in most of these materials in their individual packages to be in the range of 15 to 20% at least minimum.
Right.
And we assume the overall cost of construction might have gone up by about 5 to 10% based on which stage of construction that particular project is. One, because of this whole import of stuff. Two, because of the cost of transportation going up.
Right.
Three, timelines have got impacted.
Yeah.
So as soon as timelines get impacted in any construction, then the cost of finance goes up because you're waiting and idling.
Right.
Okay. So put it all together,
Mhm.
it has been pretty challenging for the real estate sector because we really, so far, people have felt that they are being able to absorb it through the 5% contingency they keep in their budgets. But that's only about 5 to 10%. And anything which goes above that, which I believe it's already creeping up, you will start impacting your bottom line.
Right.
And so, will it translate into a price rise? Technically, it can, but then the market will be dampened because of the other two factors, as I told you.
Right.
You understand? Because the liquidity is less, people are on a risk off mode, they'll actually try to take money off the table rather than back anything, whether it's stocks or commodities or real estate. Your sentiment is not good. So for a long time, you will be wondering whether you should actually invest or just lie low for some time. So the demand doesn't pick up.
Right.
So if the demand doesn't pick up, just because my cost has gone up, I can't pass it on to the consumer.
Right.
And if I can't pass it on to the consumer, that means my profits are being eaten up slowly.
Yes.
Okay. So now in any project, let's assume a developer runs with a profit of around 25% on an average, let's put it.
Okay.
Okay. Now that 25% will start getting impacted every month of delay
Right.
by at least 1 to 2%.
Right.
And starts slowly eating into his profit. So either we can hope that the markets will turn in the next, say, 12 months. So you hold on for some time, and then when the markets turn, you raise the price and try to recoup a little bit of your lost margins.
Right.
Or if the markets don't turn and the sentiment is still bearish, then we have a real problem of your margins having been eroded away. So
Yes.
I do tend to believe that some of these projects have to be thought through carefully. Maybe not in Mumbai, because Mumbai, the cost of construction is much lower. The cost of land still is predominantly the significant part.
Right.
But in other cities, yes, I think it'll start having an impact. And developers will have to be far more efficient in their value engineering to recover this lost margin.
Right. Do you see affordable housing having, perhaps getting hit the worst?
In a way, it will get hit the worst mainly because by the very term affordable housing, what you're suggesting is it's low-cost housing, correct?
Correct. Yes.
So if low-cost housing will be on cheaper land,
Mhm.
and so the cost of construction would be a significant portion
Right.
of the overall cost.
Yeah.
And if the cost of construction is going up by 10, 15%,
Mhm.
then naturally the margin gets squeezed.
Right.
And in affordable housing, there is little chance that somebody can really pay you top draw price.
Right.
Okay, that's one. Two, because of this liquidity, because
Yes.
of the capital outflows, you will be under pressure to raise your interest rates.
Okay.
Okay. And if you raise your interest rates, then your mortgage rate will also rise slowly.
Right.
So if your mortgage rate rises, your EMI will rise. So naturally, if a EMI rises, then the ability for the buyer of the property and the borrower
Mhm.
will become much more difficult,
Right.
will become much more challenging for him to take a loan to meet the value of the affordable house
Okay.
if you raise the price.
Right. To come back to oil for a minute, India imports nearly 88% of its crude. Help us understand what this dependency has cost us over the last 6 months.
See, we cannot really do much, whether it is China, whether it is Japan, whether it's India. We are all dependent upon oil imports. It cannot be done away with. We don't have the natural resources.
Right.
The government has done a tremendous job in trying to promote renewable energy, but it can only go to that extent. You
Right.
still need oil gas to run most of your industries and transportation.
Yes.
So, as long as we cannot really find the natural resources to have our own oil, which we don't have, we will be dependent on import of oil.
Right.
Okay. And if we are dependent upon import of oil, the next big question comes whenever that oil is threatened in its supply,
Yes.
there'll be a price hike and we will be strained both in balance of trade, balance of payments, current account deficit, everything will be straining for us.
Right.
So we cannot really take an oil shock anymore.
Understood.
Okay. And I don't know if there's any easy way to overcome this. Yes, in the long run, we will find biofuels. You will have all sorts of mixed fuels. You will try and run with more EVs. Everything will run on EV. And you will try and make that sort of electricity come more from thermal, hydro, as well as renewable.
Right.
To lessen your dependence on oil per se.
Yeah.
But on cost basis, oil is still very competitive unless it becomes very extremely high due to price hikes.
Right.
So whenever oil comes down after the price hike, which it does,
Yes.
people start feeling, is it really necessary to substitute it? You understand?
Yes.
So, and that whole thought goes away till next time there is another price hike.
Right. In 22-23, with the outbreak of the Russia-Ukraine war, we saw construction costs rise up to 18% in some areas. Do you think India will have a similar trajectory this time as well?
See, it depends upon the status of the war. As of now, there is a sort of a peace talks going on. The Straits of Hormuz are supposed to be open, but it keeps on yo-yoing every single day.
Yeah.
So technically, if you think that it started in March, so we are already almost 3.5 months coming to 4 months down,
Right.
where there has been disruption. You continue like that for another 3-4 months, God forbid, then we see a serious increase in pricing, of cost at least.
Right.
In pricing of the raw materials.
Yes.
Whether that can be passed on, definitely not.
Right.
So then there will be serious recalculation, recalibration of our models to see how best we can absorb that cost or how best we can do value engineering to see. I personally feel if you're prudent, if you're clever, if you're wise, smart, like most developers are, they would be back to their drawing boards figuring out already.
Okay.
And not take it easy.
Okay.
Because we are never really sure how long this is going on. Because don't forget, this has momentarily overshadowed the Ukraine-Russia war.
Correct.
But that's still going on.
Yes, it is. Yeah.
You understand? I don't see peace all around yet. Correct? So this is going to continue. So I personally feel we should go back to the drawing board.
Okay.
I personally feel we should question if in commercial buildings, a grade A building is necessarily a building with a glass facade.
What do you mean?
See, most buildings, we tend to ape the West.
Right.
We believe we should have a full glass facade. It's a glass building, looks good. But it's really not suitable for our climate to have that.
Right.
Except for the fact. So it's not necessarily that a grade A building should have a glass facade. There are many other amenities which a grade A building has.
Right.
You understand? So if you overcome that sort of a thing and you use more of stone,
Right.
more of glass, and you use less of aluminium, for example, you might be able to do some value engineering.
So you're suggesting maybe redesigning everything.
I'm suggesting you have to redesign, you have to be very cost effective in everything. That's right.
I'd like to move on to the impact on the financial markets. To start with, I'd like to talk about the rupee depreciation and how that's compounded the problem.
See, the rupee depreciated simply because, as I said, whenever there's volatility in the market, whenever there's uncertainty in the market, there will be a capital outflow.
Right.
Investors tend to move their money out to safer havens.
Right.
Okay. So when they move their money out, there will be pressure on the rupee. So you're earning lesser dollars than you're spending in dollars by taking it out.
Yeah.
So the simple balance of payments makes the rupee weak. And when the rupee becomes weak, what happens? All your imports are repriced.
Right.
So today, if the rupee has slid in the last, I think from the beginning of the year, it must have slid about 7% or 8%.
Yes. Yeah.
So your prices of all those materials have gone up by 7-8%. Any
Right.
imported material.
Correct.
Suppose we import marble from Turkey.
Yeah.
It'll go up by 7-8% strict
Correct.
because of the rupee depreciation. So can you avoid a rupee depreciation? Very difficult. Because whenever there's going to be pressure on the rupee,
Yeah.
we are not a convertible currency. We are still not in the fully developed status to be said that it's a safe haven.
Correct.
So if you're not that, then naturally the rupee is under pressure
Right.
and it is bound to be depreciated, and all your imports will be repriced by its depreciation. Generally, a rupee depreciates around 4% per year, what we have seen.
Yes.
But during these sort of uncertain times, they tend to go down even further,
Right.
what you have seen just now.
Yeah.
Would we be able to recover a bit? Maybe we can sometimes when things stabilize. But at the moment, it's difficult to predict when that will happen.
Right. Foreign portfolio investors have said to have pulled out close to $12 billion from the Indian equities and debt market in March 26 alone. Have domestic investors stepped in to fill the deficit?
Partially, yes. That's why our markets have not really tanked.
Right.
They have gone down. They have softened. They bounce back sometimes. I don't think it's a dead cat bounce. It is a bounce supported by local investors.
Right.
So people are buying at dips to make up. And it's good that it is very broad-based. It's not just the top stocks. You see it in small cap, mid cap, everywhere.
Right.
So domestic investors have stepped in. But we have to understand they can only do that much. They can't really replace FIIs and FPIs. Because suddenly domestic investment will not shoot up so much.
Okay.
And also you have to remember that this is a structural shift they have to do it. Okay. So we are all expecting the FIIs in foreign portfolio inflows to again resume.
Yes.
We are not expecting that they'll just go off.
Right.
And domestic will take over. That cannot happen. They will have to come back. If they don't come back, then structurally, can it suddenly be readjusted with domestic? No.
Okay.
Then there will be a serious problem in the Indian markets. You understand? We are only assuming it's a temporary setback. The domestic investor has stepped in. He is more bullish, he is more confident about the country and the economy.
Right.
And he will hold on for some time till the foreigners resume back, seeing that it has calmed down the troubled waters of the global economy. But in a permanent way, if you're asking me, can domestic investors step into the place of foreign investors? What is there? No. They have done it slowly, chipped it away. Today, the percentage you will see is much lower than what it would have been a few years back.
Right.
But it can only be done in a calibrated, nuanced way. It suddenly cannot take over the whole thing.
Okay.
So, I'm not an expert on stock market, so I can't really comment upon it. But I would tend to believe that all markets, stock, commodities, currencies, even real estate, as we were discussing,
Yes.
will all be impacted by the war.
Right.
Will all be impacted by the capital outflows which have happened. They will also be impacted by, as I keep saying, the behavioral aspect of investment.
Right.
The sentiment having turned bearish.
Right.
The sentiment having turned risk off.
Yeah.
It will impact all markets.
Right.
You understand?
Yeah.
Say, some stocks might do well. Some real estate might do well in certain localities. Some asset classes might do well. But we are looking at the overall industry, the overall canvas
Yes.
of things.
Yep.
When you do that, they will be impacted. They are impacted. They have been impacted. And how long they will remain impacted will absolutely depend upon the global movement towards
Right.
peace and resumption of global trade.
So if I may summarize, you're saying that for the moment we're okay because our domestic investors have stepped in. But if this were to continue on a long-term basis, it won't work out so well.
Absolutely. For the moment, in the sense that we have been disrupted for a few weeks, few months,
Right.
we are a large economy and we will be able to absorb it.
Right.
But if it happens that it creeps into a year, more than a year or 2 years or something, then we are seeing structurally we might be impacted.
Right. So moving on, I'd like to speak about the impact of the war on market sentiment. Today, talks have just started about a ceasefire. Hopefully, they've given a timeline of 60 days to come to a decision. Assuming that goes as planned, but how long before the market sentiment recovers?
See, because they will see whether the peace accord is holding true,
Right.
whether the streets have opened, whether people are doing the same resumption of global trade as before.
Yes.
So if you resume everything, the traffic and everything, then maybe in about 2 to 3 months, post everything being stable,
Right.
people will come back.
Okay.
So you are, in a way, seeing even if this peace accord holds,
Right.
and we all pray that it holds, it won't be towards the last quarter or the end of the calendar year that you'll see the same spirits as pre the war, because it takes time to those effects to wear off also.
Right.
But in between, again, if there is any disruption for any reason whatsoever, then we'll be back to square one.
Okay. In India, we saw home sales were down 7% in the first quarter of 2026 across India's top 7 markets. The sharpest drop we witnessed in March 26. Here, I want to ask you, is this a sign of genuine demand loss, or are buyers simply being cautious?
See, March was too early,
Okay.
as we just started in March.
Correct.
I think the real impact you'll find is in the first quarter, April, May, June.
Okay.
And then it will see about the second quarter, July, August, September. In my feeling, both these quarters will be more severely impacted.
All right.
Okay. Why it happens is, whenever there's a war, you are concerned. You're concerned whether you should hold on to your money. You're concerned whether you should do any big purchases.
Yeah.
You're concerned whether you should take on a loan and you can service the loan. All these concerns dampen your spirit.
Right.
It doesn't make you feel gung-ho about going and buying a house unless it's absolutely necessary.
Right.
For tax reasons or for their own personal needs. That's one. Two, real estate, whatever people might think, has a lot of investors in every market. People who invest in real estate, not necessarily for speculation.
Okay.
They will invest in it to rent it out also.
Right.
So there are a lot of investors. Some people invest in it to just take it through the construction phase. And they feel there will be a spike when the flat is ready.
Right.
Okay. Investors will definitely move off.
Okay.
They will be hands off.
Okay.
So actual buyers support the market to some extent because he has to make a move. He needs a bigger house. There's a child coming in. So there will be reasons for it. But an investor will say, I will wait and watch.
Right.
Because it's like what we call in investing, catching a falling knife.
Okay.
Now, suppose he thinks that maybe this war will go on, or maybe there will be disruptions, continuous disruptions, and maybe by the end of the year, builders will be desperate to offload it even 20%, even lesser than what they're offering me today.
Yeah.
Why should I buy it now?
So they're anticipating a price correction.
Yes. So now you can only tell him you buy it now because by the end of the year, it's going to go up by 20%.
Right.
That he won't buy. So he will say maximum by the end of the year, it will be the same price.
Yeah.
Or if it goes down, there is a better opportunity.
Right.
Correct? So investors definitely move out of the market in whichever city.
Correct.
You understand?
Yeah.
Because they're investing for rental, they're investing for a short-term or a medium-term capital gain during construction phase, or they're investing for tax reasons and they want to flip it. So there are a lot of reasons why people invest, and those investors will definitely lose their mojo. They won't go for it.
Right.
So the markets will only be supported by the actual users who need it,
Right.
who have put it off for a long time, and now they have to seriously think of buying a house. And they will be fewer naturally. So markets will be impacted. Markets where investor sentiment is high will be impacted more.
Right.
That's why sometimes people tell me the luxury market is not impacted. Because in the luxury market, you don't see an investor.
Right.
Why would an investor in the luxury market invest 50 crores or 100 crores and sit? There's very few. You understand? They'll be actual users.
Right.
You understand? But where they invest in the mid-market, in the premium markets, they will shy away.
Okay.
So I don't know about the value of sales
Right.
of the industry in the 7 cities, but I would definitely feel the numbers will be impacted in this quarter, April, May, June, as well as in the next quarter, you'll see the numbers impacted.
Right. So our sales velocity might go down, but if we...
if somebody has a product mix where he's selling a
luxury,
higher value apartment, maybe he'll make up by value.
Right.
But if somebody doesn't have a good product mix, like many people don't have,
Right.
then naturally he can't do that.
If things stabilize, what sort of recovery can the Indian real estate market expect, and under what time frame?
Well, assuming that the peace button has been pressed, assuming that there won't be any sort of a blowback or, resuming of warfare, then as I said, it won't be before the end of the year. You'll see some sort of a calmness returning to the markets. Okay? So that's the earliest I expect. If there's any disruption further or any escalation even in the Ukraine-Russian war, then we are back to square one to figuring out all the mechanics and the algebra of the warfare. Who is affected, how much.
Right. Is there any opportunity in this market?
Well, I just remarked, it's like catching a falling knife. So if you feel it's a good hand and you can catch it, definitely there's an opportunity.
Right.
But generally, you need to be either guided by professional advice.
Yes.
To see where that opportunity is, because there'll always be opportunities, but they will always be niche markets.
Right.
So it won't be broad-based anymore.
Mm-hmm.
So to figure out that niche market, that asset class, that locality, that particular share or stock, you need professional advice. So I would strongly advise people to seek guidance before going very intrepidly into such markets, wading into such markets.
But perhaps there's an opportunity for developers, like you mentioned earlier, to recalibrate, take a step back, go back to the drawing board, perhaps make a more viable product.
See, it is definitely happening. The metamorphosis of the Indian real estate is going towards a lot of not just digitization, is going towards a lot of financialization, corporatization.
Correct.
Which basically means you're scaling up, you're becoming huge, you're using the best of software.
Yeah.
It's no more just a ERP or something. It is much more than that, which people have to use. And when you can do in bulk and scale, then naturally you're a better negotiator. You can get things at a cheaper price.
Right.
Okay. So you're already seeing the market gradually veering towards the bigger players. Maybe most of them are listed developers, some of them aren't, but it's veering towards them because they have the scale, size, stability, strength to withstand. They have the resilience. Mm-hmm. Whereas when you're a smaller developer, you naturally will be wilting under the pressure.
Right.
You You won't be able to negotiate, get those deep discounts. You won't be able to move your people around or your equipment around. So all this does impact the
Right.
market. So any uncertainty which we see because of this war, and especially it has come on the heels of COVID in a way,
Yes.
because I felt the impact of COVID almost took 3-4 years off us.
We just got out
Yeah,
of
we
it.
just got out of it and we are back in.
Correct.
So any sort of these sort of uncertain times
Yes.
will always mean that if you're not big or strong, if you're not really consolidated yourself,
Right.
you will be on a weak wicket.
Okay.
So the natural two sort of segments that will survive will always be the big player, size and scale,
Right.
because he has deeper pockets, he
Yes.
has better negotiating skills,
Right.
and the niche player who is very good at a particular market and a good at an asset class, and he knows best value engineering in that
Right.
to get the best out of it. He's nimble, he's
Mhm.
fleet-footed, and he knows that.
Right.
But somewhere in between, which is the medium-sized guys and small-sized guys who have just got in,
Right.
thinking there's an opportunity here, they might all be squeezed over time.
Okay. If you had to leave our listeners with one clear thought about where Indian real estate stands today, what would it be?
It's a very tricky question to answer, Neha, because today I felt Indian real estate was coming out from the whole COVID shadow.
Right.
If you had asked me this question a year back, 6 months back, we would be on a sort of an upbeat.
Yeah.
This sort of a situation has not augured well for the industry.
Mm.
Okay. And you're also forgetting we have another thing looming large, which is the tech disruption,
Correct.
the AI disruption.
Yes.
Large companies have suddenly said that they're going to half their workforce
Right.
because of AI tools and use of AI technology.
Right.
That means we look at it as if commercial real estate get impacted because of that.
Right.
We are not sure yet. The jury is still out. We are all researching. But all these doesn't augur well. So if you really ask me for a consumer, naturally, there's nothing much. If you need something, you'll buy it.
Correct.
If you don't need it, you'll defer it till the times are a bit calm.
Right.
I will never say just rush and buy something.
Yes.
But for a developer,
Hmm.
to the people, my fraternity in the industry, I would say this is the time for us to really pull up our socks,
Right.
to understand that this business is as tough and as competitive as any business which you see in other industries,
Right.
where people operate on wafer thin margins.
Yeah.
They do it because they're quite quality conscious, cost effective,
Right.
timely delivery. So all this is going to come in a big way into the Indian real estate. So if you're not prepared to embrace these concepts and you're still in a time warp and you feel it's the good old 80s and 90s and, I can take my time doing this or that, or I can navigate through all the legal problems, I think they'll be in for a rude awakening and a shock.
Right. Do you believe geopolitical relations between countries in India are getting more and more transactional? We're seeing countries sort of become a little bit more pull back, not be so accommodating. In a long term, if this continues, we're seeing multiple wars. Will that also change how we approach?
See, in today's
business?
times where interpersonal relationships are transactional, why do you think international relationships will not be anything but transactional?
Right.
It's always a give and take. It's always a quid pro quo. It always has been.
Right.
Your heart won't bleed and you won't make your country bleed because you're emotional or sentimental about something.
Yes.
So it has always been transactional. The question would be far more difficult to answer whether the transactional basis is short term, medium term, or long term.
Okay.
Any relationship is transactional.
Right.
So when a transactional is a long term basis, you have the wherewithal to say that somewhere there'll be ups and downs. I'll take it in my stride. Long term, it will work out.
Right.
Medium term, it will work out. If we look at all transactions as being short term, because there's no trust factor, there's a lot of uncertainty,
Right.
then naturally that is very dangerous.
Yeah.
Not that it is transactional, but it is being looked at in a very short duration.
Right.
So you're not sure whether it will work out after 3 years. You're saying, look, let's settle it within the course of this year only.
Correct.
This can't be deferred. So those sort of things, will it have an impact? Yes, of course, it'll have an impact.
So to summarize what we've spoken about, for an end consumer, if I'm a buyer, yes, the only thing I need to worry about is perhaps paying a higher EMI for my loans, for my home loan. But otherwise, if I need to buy a house, I should consider buying
Yes, because you can't time the market
Correct.
on the pricing front. If you really are actual
Yeah.
buyer, you will look for what really suits you and you'll buy it.
Correct.
If the EMI doesn't suit you, anyway, it's a floating rate.
Right.
Maybe, hopefully, things will become better and it'll come down. So you might still. But if you're not in the urgent need of an apartment,
Mm-hmm.
it is only but prudent that you will wait and watch for some
Defer
time.
it for a few months.
Correct.
Understood. But as a developer, you have a lot to think about.
As a developer, I said you've got to tighten your belt, you've got to pull up your socks. You have a lot to think about. You have to think about it as a business. You have got to become a professional.
Right.
The professionalization of this industry has to be really put on the fast track.
Lastly, as an investor, you would say sit tight for the time being.
No, as an investor, I would say if you have the insight, if you have the guidance of seasoned players, then yes, you can go in because that's where you have the opportunity.
Right.
Every crisis is an opportunity, correct? Otherwise, don't foolishly go in with the herd.
Understood. Thank you so much for your time, sir.
You're welcome.
That's a wrap for this week's episode. Thank you so much for tuning in. Don't forget to share your feedback and thoughts in the comment section below. Hit the bell icon for regular notifications and don't forget to subscribe to our channel. Until next time, thank you so much for tuning in.